And if you wouldn't mind, be sure to mute your microphone. That will keep us, because I want you to be able to ask questions, but you might want to mute your microphone. That way, if somebody comes in from the backside, you'll be okay. You don't kind of hear them. So I'm going to mute this microphone here. There we go. Okay, so I think we're going live now on YouTube. And so I want to log into the course, and I'm going to go into one of the modules. So let me share my screen, and we are good to go. And I want to share desktop number. There we go. So I'm going to share this screen. So you should be able to see my screen now. Hopefully everybody can see the Global Real Estate School screen. If I could maybe get somebody to, maybe you could wave your hand and I'll know. There's a virtual hand you can wave and I'll know that I am sharing. You can see my screen. So anybody? Okay, thank you, Stacy. Appreciate that. All right, good. All right, so what we're going to go over, I want to kind of remind everybody, if some of you are new and you haven't gotten to this portion of the course, it's no big deal, don't worry about it. But I do want to remind you how to navigate the course. Now, when I first started my online school a few years ago, there's a couple of pieces to putting a course together to offer online. Number one, you have to have what's called a course authoring software. And I use a company called Articulate Storyline. It's a great program. It's used by a lot of Fortune 500 companies. It's very expensive, but does a lot of really cool things. We're going to be making some updates this week, and I sent an email out. It'll be going out sporadically over the next 24 hours. Basically, I'm going to make these in the morning between 6 and 10 a.m. If possible, try to finish any module the night before. But if you're in the middle of a module and I happen to update that module and you are reset to slide number 1, don't panic. Just reach out to me and I can mark that complete for you, okay? Or some people may want to go back through it a second time. However, if I mark it complete and you're thinking, well, I was right in the middle of that module, I'd like to finish it, John. There's no way I can pick you up where you left off. However, if I mark it complete and you go into the main course, right over here, and I'm going to just kind of annotate this so everyone can see this, draw with this little pin right here. Right here, you're going to see a little arrow button right there. And what I want you to do is I want you to close that arrow. So if you close the arrow, you'll notice that it shows you more courses down below. See that? And these are the review modules right here. So let's just say that I happen to mark the module complete, and you were in module 10, and you were right in the middle of module 10. And you were like, okay, I'm glad you marked module 10 complete, John, but I'd like to go back and pick up where I left off. You can go into the review module, and
Welcome
all
to
you
chapter
have to
10.
do,
This is an important.
move this down. All you have to do is use your menu button, and you can drop down here and say, well, I was on dual agency. You can drop down to dual agency because the review modules are unlocked, okay? So I know I'd spend a lot of time going over this, but I have a lot of students that still kind of don't realize this. So you can drop down here, finish module 10 on the review side, However, when you get done, you want to definitely go back, exit out, and you definitely want to go back to the main course, okay? Hopefully everybody was able to see that okay. Zoom does some weird things, so hopefully we're able to see all of the tab work and the course that opened up. I know that opened up in a new window. I just want to make sure that it's showing that you can see everything here. Okay, so again, just minimize this screen. You can drop down to the review module. So when you finish, then you'd want to pick back up in the main course and you'd go on to module 11. Okay, just wanted to make sure everybody was aware of that so that you were good to go there. Okay, so we'll be doing a lot of updates, and I was mentioning that it takes two pieces of the puzzle to put an online course for this online. So we have Articulate Storyline, and my daughter and I have been going through and making a lot of changes, correcting some grammatical, some spelling, some things that are labeled incorrectly. Um, I'm adding, there's some audio that's missing on a few slides. Don't tell me how that happened, but I'm fixing that. So we have really done a good overhaul of all the modules. We're going to be uploading those between 6 a.m. and 10 a.m. every morning. So if you for some reason get into a module, we upload it and it does something weird, just reach out to us and we'll get that fixed for you. And you can go into the review modules. This is what, Litmus, I love. They do a great job, but I really don't know why in the learning path that they have these courses underneath the main course. But just remember it defaults to opening, and don't forget that down below you have lots of other courses, okay, that you can use. Okay, enough of that. Let's go down to chapter 15, part 1. Why don't we do that? Whoops. I'm in the main course. You don't want to start over here, so I want to go into the review modules actually, because I can jump around in the review module. So we're going to go down to 15.1. Now, the review modules or chapter 15 at one time was one big chapter.
Welcome to
And
chapter 15,
I made that into 4 smaller chapters. And this is one of the things I'm fixing. There are some questions being pulled from a question bank that you haven't covered some of the material. But anyway, we're fixing all of that for you, so don't panic about that. And I'm just going to mute, just trying to keep everybody muted because I think it works better too. There we go. All right. So let's go into chapter 15, part 1. Enough of the housekeeping stuff. And I apologize, we spent so much time there. So 15 was one big chapter. And if I had any complaints from students, and they weren't really complaints, they were just like, wow, could you break chapter 15 up into smaller modules? And so I did that. And I think it works better this way. And now I have a problem with the quiz banks, but I've got that fixed and we'll be uploading that. Hopefully tomorrow that'll all be fixed and uploaded. So the first part of this chapter 15 is when we really talk about qualifying for a loan. And there are some questions on from this specific module. And so I'll try to point out what seem to be the topical questions that are going on now. These are just some of the different types of financing institutions. They used to love to ask the question about commercial banks being more geared towards small-term business loans and savings and loans being more geared toward residential single family. Maybe saw a question about, uh, who makes these larger big loans for apartment complexes or office buildings, generally coming from insurance companies. But we'll go through some of these as we go through the chapter. And most of these types of questions, I think, will be pretty easy for you to understand. So, again, I just want to point out a couple of things here, and I'm going to use my mouse to highlight. They love this question about right here. You can see that a commercial bank is primarily involved in small business type loans. Now, they could very easily have a question that says commercial banks make what types of loans, and if they had small business loans, single family loans, automobile loans grouped as one answer, that's probably going to be your answer. But again, I'd just like to point out that at one time we did see this question quite a bit about what's the primary types of loans commercial banks make, and the answer was small small business loans. Okay, but they do many more other types of loans. If you saw a question that said, uh, which of these primarily makes single family residential home loans, I would go with savings and loans. That would probably be your choice right there. Mutual savings banks, I don't think it's located in the northeastern part of the US, and I don't think you'll see that on the exam. You could very well have to understand the difference between a mortgage broker and a mortgage banker. Okay. Now, think of a broker as someone who's brokering loans between the consumer and lenders. A good example is like an insurance broker. A lot of independent insurance agents, when they're not affiliated with a State Farm or an American Family or Allstate, they're independent, so they have a lot of different insurance companies that they can broker through. So again, mortgage broker is working between the lender and the borrower. A mortgage banker, on the other hand, works directly with the consumer, the borrower. So a lot of times you might have, a friend of mine um, had a bank and or was president of a bank, and they had they had a lending side for residential lenders, and you would have classified them as a mortgage banker. They're working between the banker and the lender. So you very well could see a question on the difference between those two, or at least this mortgage broker. Credit unions, I think we're all familiar with. They do a lot of car loans, and they get involved in some other types of loans as well. Now, rural development, you're probably going to use this, many of you out there who are, once you get your license. The biggest problem we have with consumers in my area, and I'm in a small community, Farmington, Missouri, it's about an hour south of St. Louis. The biggest problem we have is borrowers can make the mortgage payment. They don't have a problem making the monthly payment. The problem is coming up with the down payment. That's the big issue. Now, in this chapter, we study that um, if you don't put 20% down, the lender is going to have to require what is called PMI. P is in Paul, M is in Mary, I is in Invicta, my watch I have on. And it stands for Private Mortgage Insurance, PMI. Now, the reason they have to charge private mortgage insurance is because you're not putting a sufficient amount of collateral for the loan. They like 20% in cash or something that's equivalent to 20% or more. Okay. If it's less than 20%, they require what is called private mortgage insurance. Well, rural development, it's part of the government. It's a program where we can take a borrower and the seller can literally pay the closing cost for the borrower. Do this all the time. So if you have a home that's listed for 125,000 and you have a borrower who qualifies for rural development and their guidelines are not that difficult, they could offer the full price, 125,000, and ask the seller to pay all their closing costs, which might be $4,000 or $5,000. I mean, you have to talk to the lender, and you won't have to do that on the exam. But what I want you to know is this: because the the rural development is guaranteeing the loan for the lender. So the lender is guaranteed that if the borrower defaults, rural development's going to take care of them. It makes it a little easier to get the loan. Otherwise, that borrower on $125,000 would have to come up with 20%, which would be $25,000, right? 12.5 and 12.5. 125,000, 10% is 12.5. So 20% would be $25,000. Most borrowers just don't have that kind of money. So as you can see there, the loans can be insured if directly through their office they're insured, or if they make it through a bank, they guarantee the loan. Just remember, rural development works with lower income. Now, I hate to use the word lower income because a lot of people can qualify. And here's a test question on rural development. You might make a note of this. It's based by, just like VA and FHA, it's generally based by the county. And so the government will look at, what's the median income and all these other factors. And then they put housing guidelines in place for those types of loans. It is a great source of financing for young couples. They can generally get in a home with no money down. A lot of young couples don't know this. This is a good program for you as a new agent to pitch through a postcard mailing to apartment complexes or on Facebook advertising. There's some great benefits for this. So again, understand rural development, working with buyers, sellers can pay the closing cost. The loan amounts vary by county. Another thing you might want to know. And it's federally funded agency. They insure the loans. If they can make loans directly, rural development, but many of the loans we do today are guaranteed loans through the lenders, and most local lenders will make the rural development loans. Insurance companies, large scale loans. And then they love this question: the owner of real estate can finance it. And we call that, and you need to write this down, it's called a purchase money mortgage. Anytime the seller helps with financing, we call that a purchase money mortgage. Seller financing. It could be an installment contract like we talk about, which is a contract for deed or a vendor's contract. But an installment contract, the seller can also finance. I got my license in 1978 at the age of 18. And I mean, right out of the gate, like the market back in 78 was so hot, kind of like it is today. And I remember I'm an 18-year-old kid and I like sell my first house and I made $2,400 or something. It was a pretty nice commission check. And I'm like, and this is back in 1978. And I'm thinking, that's pretty cool. My friends are working at the grocery store and other places and for like $4 an hour back then or whatever. And I mean, I was like making really major money as a freshman at the community college. But then interest rates went up in 1981 to like 20%. 80, 81, 82 was horrible. The market became horrible. However, we realized that a lot of sellers owned their home free and clear, and they needed to sell, and many of them financed it. And so we got creative with financing back in the early 1980s, and it's how we learned to survive. One of the things I want to remind you, because I know some people, you're going to school now, and I want to encourage you that you're going to do good as an agent. Um, One of the things that's kind of interesting now is that, um, some people wonder, well, what's the market going to be like? First of all, most economists and the NAR economists are saying that we're going to have a pretty robust market even in over the next few years because there's just a shortage of inventory. And so because of that, it just keeps the demand is up. And the key for you is going to be out and get listings. Listing is existing. That's what I was told when I was a new agent from a friend of mine, Dan Bixby. And Dan said, just remember, John, listing is existing. And I've always told my agents that, he who has the most listings wins the game. And so you got to get out and get listings. But one of the things I want to remind you is that even when the market went south a few years back with the mortgage meltdown, there were a lot of investors who came into the marketplace. And so, there's always going to be ups and downs. You just need to figure out, read a lot, take good educational courses, stay motivated, and you'll do just fine. So I just tell you all of that to say in the early 1980s, we did a lot of purchase money mortgages, and those were sellers who were financing the property for us. Now, this is something that you need to know for the test. And has to do with, let me real quickly make a change there because somebody wants to show a house at 5 o'clock and I'm actually showing it at 5. So let me just tell him very quickly here. I'm actually showing the house at 5, period. If you would like to show it later in the day, please reschedule. One of the things you'll be doing when you get your license, and I only did that for you, is that, we have this thing called showing time, which is kind of cool. And it allows you to set up an appointment if someone wants to show a house here. So for instance, someone's requesting a showing on one of my houses, which is empty. And I should have that auto populate, but he just moved out. So anyway, I needed to take care of that real quick. So, so when you're working with buyers, I want to just kind of go over this slide because you're going to apply for the loan. The buyer's going to apply for the loan. They're going to really look at 3 areas. They're going to look at your capability, your character, and your collateral. Now, capability is, can you pay for the payments? One of the things they're going to do is they're going to look at what we call a debt to equity ratio. So I'm going to jump over here to my iPad just so I can show you this very quickly. So we're going to move over. One of the questions that they have been, let's see here. They've been asking a lot, and I'll give you that answer here, okay, in just a second, because there's a couple of things I want to make sure you understand here. Whoops, that's not the application. Like this app here, I think you're able to see my iPad. So Are you capable to make the payment? So the first thing the lender's going to do is they're going to look at are you capable to make the payment? And I'm just going to use a real basic number here, but they call these debt to equity ratios. And there's usually two ratios that the lender is going to look at. The first one they will look at is what is your gross monthly income? So they look at the gross monthly income, and that's monthly, okay? And they base that, or they weigh that against the proposed house payment, the proposed mortgage payment. I'm going to put house payment, but okay. So I'm just using some really basic numbers here. And you don't have to normally, I don't think you'd have to calculate this, but it's real easy to do. If the borrower made $1,000 a month, that's their gross monthly income. This first ratio is anywhere between 28% and 30. Probably it's more like around 28%, could even be a little less. So based on this, what is 28% of $1,000? It's $280. It's 1,000 times 0.28. Okay, just a T problem. We take $1,000 and we multiply it times 0.28 or 28%, and that will give us $280. So if your buyer is looking at a home and they want to purchase this home, and you um, tell them that their proposed, hey, based on my calculations, your house payment would be $340 per month. Guess what? It's kind of like the X on the what's the Simon Cowell, America's Got Talent. Done. It's not going to qualify. You've got to. The bank's going to look at this and say, hey, you really need to be finding a home that's where your house payment's going to be under $280. Okay, so that's the first ratio. The second ratio they're going to look at is your gross monthly income. Remember, it's $1,000. And then they're going to look at your proposed house payment and all of your monthly obligations, your credit cards, your student loans. Sometimes they're still looking at those, your car loan, all of those. And that ratio can be anywhere between 36% to 41%. So, they're going to take all of this and add it up, and you're going to have to, in our example here, probably make sure that all of that is $410 or less. Okay, so when we talk about the fact that they're looking at your capability, we're really looking at the fact that I'm going to make sure that I have stopped sharing my screen. I think I have. We're really looking at, can you afford the house payment? So those are the first things the loan officer is going to do. The second thing's your character, and that's a credit report. Okay. So they're going to pull your credit. They're going to look at things like how long have you been on your job? Um, how long have you lived at your residence? Generally, they like a pretty steady track record. And if any of those are out of whack a little bit, that's going to probably be a problem. Okay. And then finally, they're going to look at your collateral. Do you have a down payment? If it's a real development loan, is the seller going to pay the closing costs and so forth? Now, just a couple of things on your home address and your job. They like to see some stability on your job. generally 2 years. But if you show a pretty good track record of being in the same type of field, that would work. I recently had a borrower who got denied a loan right before we went into close, and it wasn't my buyer, it was my seller, because he switched jobs like the month before. And when the underwriter, that's what I want you to write down here, when the underwriter went in to view that information before 2 days before closing, this borrower had not only switched jobs, but he'd also gone out and borrowed money to buy furniture for the house, which caused his debt to equity ratios to go out of whack. Well, the deal fell apart the day before closing. My seller had already moved out. It was a nightmare. In fact, that's the house I'm going to show at 5 o'clock. So, it just, they're going to be real concerned about that. And what you want to be sure and tell your borrower is, don't do anything to your credit. Don't go out and borrow money once you've been approved. Wait till that transaction's closed, and don't quit your job. They're basing of that on certain criteria, and if you make changes, they could deny you the loan. And they are getting very savvy. The lenders are, to go in and pull this stuff the day before closing. Hey, what's changed? So you always want to tell your borrowers not to make any mistakes and borrow extra things, or just take a low profile till it's closed. Okay. Now, same way with your home. If they see where you've moved a lot, that's kind of a red flag. So you want to keep the red flags off. Stay in your job. Don't move a lot. Don't disrupt your credit in any way prior to going and closing the loan. Now, I said I want you to make a note about the underwriter, and I'm going to jump down here. This has been a test question, okay? Who's the final approval come from? The underwriter. Actually, I didn't have that in my material 8 months, 10 months ago, and a couple of people were telling me they had been seeing this question. So I thought I'd covered it somewhere, but I wanted to make a specific slide for that. So this has been a possible exam question. Just keep that in mind. Once you meet with a loan officer, they pre-approve you for the loan. They have to order your credit report. They have to order an appraisal. They then have to also send out verifications for employment. They send out verifications for your checking account. They don't want to see, if they see a large deposit go in your checking account, they want to know, was that a gift? Because they're basing that loan on your capability. And a lot of times gift letters are okay. You just need to get that approved in advance. And a lot of times the lender is going to want a copy of the check that was deposited along with a copy of the deposit slip. But they're going to get your verification of your checking account. They're going to run your credit report, verify your job. And if you're renting, they're going to verify where you're renting. Do you pay okay? So once all of that stuff's been gathered and brought together and put in order, the underwriter then goes in and makes sure everything's ready to close. And that's the person who might pull that last minute credit report. Okay. So this has been a possible exam question. Who's that last person that's going to sign off on the loan or approve it? It's generally the underwriter. We talked about these, so I don't really need to go through that. And then we go into the appraisal. All of that's ordered, and then the underwrite. I hate to take questions I hate to do questions because I could make a mistake here, but we'll take one or two. Now, I didn't cover this in the chapter, but this is good for you to know because they do like this question too. A commercial bank would make all of the following loans except, and the answer is usury rate or greater loans. Usury rate is the maximum interest rate a lender can charge based on what is called the state usury rates. Some states it's 29, some it's 36. But just remember, usury is it's a maximum interest rate that can be charged. So that's the correct answer. Now, one of the things I'm doing with the new updates, if you miss a question, you get feedback in the first couple of chapters, and I realized that wasn't carrying forward. And so we're fixing that error. Then at the end of the course, at the end of the module, when you take your review test, those will give you the audio response regardless if you get it right or wrong. Because I had a lot of students tell me sometimes they get it right, they don't know why they got it right. So which lending institution has the greatest investment in first mortgages? Well, again, that's savings and loans. Commercial banks, that's the short-term business loans. Insurance companies are getting involved in the bigger high-end loans. And FHA, Federal Housing Authority, will talk about, they do single family loans, but this is lending institution, not agency. That's the key for that, okay? Now, the next question, in theory, a person could say the basic purpose of a commercial bank is to, and I see a question came in, and the answer is make short-term business loans. Let me take a look at that question. I very much appreciate the explanation as to why things are right or wrong. Thank you for those updates. It was hard having some without explanations. Okay, yeah. I know a lot of people ask that, and I apologize. So again, we'll be updating a lot of stuff over the next couple of days. And one of my other things I want to do, Michelle, is I've invested in all this video equipment. You might have noticed from chapter 2, I had some on-site video explanations of difference between a trade fixture, and I did one with the gazebo at my pond over our pond here. I'm going to be adding a lot more videos like that over the next couple of weeks, where I'm really going to drill in on some of the harder topics, but take you out in the field or do more of an explanation at the video board. So thank you for your comment. So short-term commercial loans. A mortgage broker generally offers which of the following services? Well, remember, it's bringing the borrower and the lender together. So I'm looking at those because remember, it's a mortgage broker. I think that's the right answer. An extension of credit from a seller to a buyer to allow the buyer to complete the transaction is called, it's a purchase money mortgage. Purchase money mortgage. And they could ask that in a lot of different ways. If the lender was analyzing buyer credits owed versus their total income, we call that a debt to income ratio or debt to credit ratio. I think debt to income's a little bit more. And then here's a gentleman that's going to purchase a big apartment complex. He's probably going to go through an insurance company to look for financing there. Generally, the person who reviews all of the documentation alone and makes a recommendation as to whether it should be made or not is the underwriter. And then FHA, we haven't talked about FHA yet. I like to throw a few of these in. By the way, in the new updates I will have, you actually won't take any final exam quizzes on chapter 15 until the conclusion of chapter 4. That way, I won't have anybody getting upset if they miss 2 or 3 questions. FHA can finance all of the following except, and it is office buildings. We will find out that FHA can finance 1 to 4 families. They can do some other, different things like that as well. Okay, so that gets us over module one. I do have to go show a property here. It's 4:48 right now. I am going to try to do a little bit more frequent live streaming. These are not mandatory at all. They're just here to help you. One of the things I plan to do, and I don't know, I'm going to try to do this tomorrow. I'm not 100% certain, but I am going to try to do um, I'm going to try to do state specific instruction. So I'm going to do Missouri one day, and I'll let you know when I'm doing that. It'll be Missouri state material. I'll be doing Indiana another day, and Oklahoma another day, Kansas another day, because I have students from all those states that are in here. So I am going to try to do those, and they may be at different times, but if you can't make it, don't panic, because you can always go out to the YouTube channel, just type in YouTube, and you want to go out and just type Global Real Estate School, and you'll see we're live right now. You can see that. So, but you can watch these at any time. They're out there, and just take a look at those. Okay. Trying to think if there was anything else. I think I told everybody. One of the things I have noticed, some people have mentioned me some scoring that's different here that's in your module. Don't worry about that. The last update Litmus did some weird things to the scoring, but that doesn't have any bearing on your certificate. The only thing that has a bearing on your certificate is you got to pass these two final exams. Okay. Now, for those of you in Indiana and Oklahoma, and it's not that, it's kind of the same way in Kansas as well. Just so you'll know, when you get down here to the state material, the course will fly. You're almost done. Okay. Because these are short modules. And really, a lot of this you're already going to be knowing and understanding. So just want to give you a heads up. Really, when you get past module 16, it starts to fly and does real well. So hang in there, keep working hard. Please know I'm always here if you need help. You can reach out to me. I want to thank you. I get a lot of nice comments from all of you, and I appreciate that. A lot of people write me and send some notes. I mean, I'm proud of the course. I put a lot of work into it. I know that sometimes there can be a glitch or a weird thing. That's part of technology. This is Apple's iPhone. It's like been giving me glitches galore the last couple of days. And I always remind myself, I'm like, well, you know what? I shouldn't feel too bad, because even a company as big as Apple has some weird things. But we're working on trying to get those fixed. But thank you. Reach out to me anytime you have questions. I hope this was helpful for you today. I just want to make sure and see if we have any other questions. Um, well, thank you, Omar. I appreciate that, and excited to have you as in the class. And anything I can do to help you, please do that. All right. Well, have a great evening, and be on the lookout. I'll send out emails when I'm doing some live streaming, just to give you a heads up. But I'd love for you to join if you can. Thank you. Have a good evening.